Just going to go through some tape reading that I did. So there's silver bullet long, and then my target draw liquidity was the mean threshold of a 1 hour bearish order block. And then my final draw liquidity was the high of the of the order block, bearish order block, which is on the hour. So I had 10 more pips. It already rode about 20 pips, I'll say. So a nice silver bullet that was. And then I'm just explaining that always pay the trader, take money off at when it makes new highs because it obviously could reverse. And I'm going to look for a reversal and then potentially try and go short from here. So um, yeah, I'll let you know what I'm looking at and why I should take off my long position. So 10 to 11 is where the high of the day sometimes gets created because the London is closing, especially on a Friday. So here there's a market structure shift and it closed below mean threshold of a order block. There's another order block just down there which I'm going to draw out here, and if it closes below that then I'll take out the trade. So it closed below there just now, I'll be out of the trade, and then there's a bearish breaker which I draw right now there. That's a bearish breaker. Price taps into the bottom of it to the T, also a fair value gap, so that would be my entry to go short. And where's my targets for the shorts? It's for the people who went long, who moved their positions, like their stops, below the lows. That's where my target's going to be. Shout out to ICT, by the way. This is what he's taught on his free YouTube channel, the Inner Circle Trader. So yeah, I'm just putting down the my targets here. Price literally just took that low a little bit, and it's just ran a high there, ran the buy side. So it literally, people who moved their stops too early when they went short would have got taken out and would have been annoyed from themselves because they moved their stops too early and then they'd be out of the market. So price is just literally just going to run down now. There's no point of running back up because it's already taken buy side. So it wants to seek sell side now. So target 2 has been hit. From that little where it's at the little sell side there, I'm going to pull back up. You can take a little bit of partials if you wanted to, but I'd usually probably just where the target 2 is, I'll take half of slash 3/4 off because that's a nice 4-to-1 risk to reward, and then I'll let half, like literally, I'll say like quarter or whatever, run to the lower. So now I'm just saying, because of what time it is, I don't really want to see it close above the consequent encouragement of this SIBI. It can do. It could pull back up into the next SIBI, but because of the time, and I just didn't really want to be in this trade, or I wouldn't want to be in this trade um, because it's Friday, so there's no point of just holding and then having to be in the pullback position, so I'll be out then. But I've just seen the charts now, and it's just tapped into the SIBI that wick there, and it's fell all the way down, and it's taken more sell side, so it'd been a nice trade. Sorry if you can hear the washing machine in the background. But yeah, leave a like. Let me know if that's helped.